Hi, everyone. Welcome to the second workshop conducted by TCS in lieu of the upcoming management case study examination. This workshop is focused on the P2 related syllabus areas, and as the session outcomes, we will take you through the P2 syllabus and we will highlight the key areas for Trimayr along with how they can be tested. This will be followed by a discussion of a mock examination task from the first mock exam that we have issued. We will also have the opportunity for a Q&A today, and you can use this time to raise any questions you have pertaining to P2, and you can even raise questions that relate to other syllabus areas, especially if you have questions relating to F2 and those who have done the mock exams. If there are questions coming from the master classes, please do raise the questions during the Q&A session. So first things first, the P2 syllabus overview. But before that, let me also remind you about the two workshops that will be happening in the upcoming weeks. So we have one more workshop on E2, and it will have the same um, uh, plan as today's. We will have the E2 syllabus overview followed by a discussion of an E2 task. And also, we will have a Q&A session for E2 as well as other syllabus areas. And then we are looking at the final workshop in the last weekend before the examination. So this will be on Sunday, and as you can see, it will be in the morning because in this workshop, our focus will be on how we have to maintain our composure and how we should make sure that we execute all our practice and plans during the examination week. So let's go through the P2 syllabus overview and let me take you through the document which we have prepared with regard to the mock exam syllabus coverage. And last week we looked at F2 from this document, and today we will focus on the advanced management accounting related topics, which is P2. Now, first things first, we have organized the topics based on a different order. You can look at the topics in terms of the examination blueprint, or you can also look at the topics in terms of the competency framework that you find in the FLP framework, which is closely aligned with the official study text order. But to make sure that it's easier for us to discuss and also to break down the topics, we have listed the topics differently. However, we have made sure that all the topics relevant for the examination from P2 are included within this document. So let's start with investment appraisal. So remember, this has been an area which is tested in every examination diet. So that is, if there are 6 variants for one case study, at least in one or more variants, you would come across questions pertaining to investment appraisal. This is a topic which is exclusively covered in P2, and management case study is the case study in which the examiner could test the knowledge of CIMA candidates with regard to investment appraisal. And that's why this has been a topic which is frequently tested at the MCS. So we start with NPV. And with regard to the 4 investment appraisal techniques, we've listed 3. And of course, I'll mention the 4th one as well, and how you should go about your preparation of the different investment appraisal techniques. Well, you should be able to explain the concept, the technique, NPV, what it means, and what does the result convey. So a conceptual understanding is important, and you should also be able to highlight any pros and limitations of these different techniques, because you will learn that each technique is focused on a particular outcome and there are certain limitations when we use them in investment appraisal. So please make sure that you have the technical understanding of the 4 different investment appraisal techniques, along with the the advantages as well as some of the limitations of the techniques. Now, don't expect a theoretical or a technical question in the examination. Why you should be aware of the limitations is that sometimes the task may require you to discuss more than one technique. And when you're recommending a technique, you should know based on the given situation, it could be this technique which is more suited. So make sure you understand the situation, the context of the task, and accordingly construct your response. And you can, of course, start with a brief explanation of the technical concept, but re please remember it's a case study examination and it's not going to be technical where you just dump theories about these different techniques. So first of all, NPV, the most popular technique out of the four, and most of the questions in the past variants have also related to NPV. We've come across questions where an NPV appraisal, a calculation had been provided in the attachment, and the candidates were asked to interpret the numbers and also to provide suggestions as to how the management can, improve the NPV appraisal. We've also had situations where there were no numbers with regard to the NPV calculation, but candidates were required to explain how an NPV appraisal can be performed for a given scenario. It could be a new project, it could be a new strategy which relates to expansion, or any other decision which involves capital investment. So long-term decision making and how we would be using an NPV appraisal to evaluate that long-term decision. So remember, you could be asked about the relevant cash flows relating to the NPV appraisal, and that would mean you need to look at incremental cash inflows and incremental cash outflows. So you also need to be aware that investment appraisal techniques look at the future. So they are built based on forecasts, and therefore the examiner could also test your knowledge on the difficulties, the challenges associated with forecasting or predicting the cash flows relevant for an NPV appraisal. So if you can cover all these bases with regard to an NPV appraisal, then the chances of scoring high marks is actually within your grasp. Also related to NPV, you could also be tested on IRR. Remember, unlike NPV, IRR looks at a percentage or a relative return, and we generally use both these techniques together because IRR is the discount factor at which, or the cost of capital at which the NPV is zero. So knowing this helps us understand the margin of safety we have in terms of the investment. Moving on, the payback period. So it's slightly different to NPV and IRR because the payback period looks at only the initial investment, and it looks at how soon we can recover the initial investment. So unlike NPV and IRR, which looks at the entire project life, the payback period is focused only on recovering the initial capex. And it is a limitation, but the purpose of using the payback period is to assess the risk associated with the capital spending. A shorter payback period would indicate lesser risk because you stand a chance to recover the initial investment faster. However, the problem with payback period is that it does not look beyond the payback period, and it does not tell us what would be the ultimate return from the project. And that's where the NPV appraisal becomes handy. Moving on, real options. This has been tested frequently in recent sittings, and it could perhaps relate to the fact that these tasks that related to real options in the past case studies were not well answered by the candidates. As I mentioned last week, if you go through the examiner's reports, you will you will see a breakdown of the different variants, all 6 variants, and for your case study examinations, you will receive those reports after your results are released, because remember, for May examination, only an interim report is released. So when you go through past case studies and when you look at how candidates have performed across different variants and across different areas, you might find that the examiner highlighting that topics like real options were not well answered by the candidates. It could be down to the fact that the candidates were not really familiar with the different options that we have with regard to investment appraisal. So we've got this covered in our mock examination. So please make sure that before you attempt the upcoming mock examinations that you have some understanding of the real options. Moreover, we could also look at sensitivity analysis, also known as what if analysis in relation to investment appraisal, especially when we are working out an NPV appraisal. We could look at how a change in one variable could affect the ultimate outcome. So uh, it's a forecast, remember, the NPV. We are looking at numbers to the future, and it's a long-term decision making. So maybe we are looking at 3, 5, and 7, 8 years. And we would likely face situations where the numbers could turn out to be different or significantly different to what we forecast. And we would like to know what would be the outcome if those numbers were to be different from the original forecast. And that's where sensitivity analysis becomes helpful. So please make sure you also have an idea about sensitivity analysis with regard to investment appraisal. Moving on, we could look at responsibility centers, and in today's mock exam discussion, we would be focusing on a task relating to responsibility centers. You have encountered this in mock examination 1, section 4. There are 4 different types of responsibility centers, and we will be discussing them in detail later on. So for the time being, let me skip this discussion. Performance measures or KPIs. Now, it's not often that you find the pre-scene itself provide you with certain KPIs. In the case of Trimayr, you will find that there are KPIs which Trimayr's management uses to evaluate the performance of the franchised salons. And highly likely that there could be a task relating to KPIs of a franchised salon, or maybe KPIs relating to the performance of one of the segments. And there could also be situations where you are required to recommend new KPIs considering some new developments. So please make sure that you are thorough with the performance measures, and you should be aware that there are financial measures that we use, and we should also evaluate performance on non-financial measures. And that is where the balanced scorecard approach to performance measurement becomes highly helpful. So please make sure you have an understanding of the balanced scorecard approach, which will ensure the consideration of both financial as well as non-financial measures, because there is also a misunderstanding among some candidates that the financial measures are not helpful. They are helpful, but to a certain extent. So we don't rule out the possibility of financial measures being relevant and being, helpful in long-term decision making. But we also draw the attention of the management to numbers beyond the financials. And that is where we will develop non-financial measures focused on customer satisfaction, focused on innovation, employee perspective, trainings, and research and development. So please make sure that from the perspective of Trimayr, you understand the list of KPIs that we are currently using. You don't need to memorize those, but you should have an idea about the current set of KPIs that the management uses. Benchmarking, it's another relevant area because the pre-scene itself outlines the fact that we are currently using internal benchmarking. The franchises are ranked based on the KPIs, and we have a team, a franchise management team, which works with the underperforming franchisees. So we are using internal benchmarking, and please remember, whichever benchmarking approach you take, whether it's internal benchmarking or external benchmarking, there are some limitations. And we need to understand that when evaluating the performance of the franchised salons or any unit or any manager for that matter, we need to appreciate the fact that there could be uncontrollable factors that affect their performance. And these are some of the limitations of a benchmarking approach to managing performance. Connected to responsibility centers, you could also be tested on transfer pricing, especially if there is an internal transfer of goods or services between profit or investment centers. So you should know the basics with regard to the transfer pricing strategies. And more often than not, the questions in the management case study examination have focused on the challenges of determining an appropriate transfer price in a given scenario. So please make sure that you also understand how a transfer price should be decided, because there are certain goals when it comes to deciding the transfer price. And the challenge would be to achieve those goals while determining an appropriate transfer price, because the price has to be a win-win. It has to be a win-win for both divisions, and it has to be a win-win for the company and the divisions. In other words, the group and the divisions. So that's not easily achieved, and that's what you would be required to highlight when it comes to transfer pricing. And you should also be open to the fact that in a company such as Trimayr, where we are having different functions, starting with our own salons, and then we have the franchised salons. On top of that, we have the Trimayr Academy, and we also work with manufacturers, because we have our own branded product. So in a corporate structure which is as complex as Trimayr, transfer pricing could relate to products. It could also relate to services. So you should be open uh, to a scenario with regard to transfer pricing where either situation could be examined. Moving on, cost management. It's at the heart of management accounting, and there are certain topics which come under the purview of P2. And we can start with activity-based management, not frequently tested as some of the other topics, but as you would have gathered from the F2 workshop last week, we cannot rule out the possibility of any topic being examined, because certain topics which were not examined for 4 5 years were examined in the recent sitting. So let's not take a chance. So activity-based management, which was in fact tested way back in 2020, a case study relating to I believe a service industry related company. And so it could also be relevant to Trimayr, because remember, we are also in the same industry. Moving on, cost transformation techniques, in particular, the CGMA cost transformation model. Now, this is a fairly straightforward model, which you can understand, however, candidates have not been able to identify that the cost transformation topic mainly relates to the CGMA cost transformation model in the P2 syllabus. So past examination questions, some have specifically indicated the model that you ought to apply, the CGMA cost transformation model. Certain questions have hinted about cost transformation techniques, and the candidates were required to use the CGMA cost transformation model to respond to those tasks. And of course, some candidates missed out on those because they did not understand that cost transformation techniques, the ideal approach in terms of the P2 syllabus would be to use the CGMA cost transformation model and build your answer. So please make sure you have an understanding of the model and how it could be tested in relation to Trimayr. Moving on, target costing, another specific P2 related area and a topic which has also been popular among the MCS variants. So please make sure you understand target costing, especially when we have new developments within the business, when we are coming up with new products or new services. The target costing approach is highly relevant because it's an outside in approach rather than working out the costs and coming up with the pricing. We look at what the target market customer is able to pay before we come up with the pricing strategy. So yes, we should cover the costs, but at the same time, the product should be affordable to the customers in the identified target market. So that's where the target costing technique becomes helpful. Of course, there are some limitations with the approach, but it's an approach which is, followed by many companies which are in industries or which are competing for customers who have a value for money proposition or who are unable to afford higher prices for the products or services that the company is marketing. Customer profitability analysis, remember, it may not be highly technical in the sense of customer profitability analysis. How it could be relevant for Trimayr is the fact that we have um, two segments in which we are operating, the upmarket and the mid-market. And you might want to evaluate the profitability of these franchise salons across the different segments, because the premium segments generally achieve a higher margin thanks to the higher prices that we are able to charge. But we also need to account for the fact that the uh, costs of operating in highly attractive environments should be accounted. And sometimes the margins could be comparable, or sometimes the mid-market salons which not necessarily operate in the highly urbanized areas, but in somewhat suburban areas, could be generating higher margins. So premium pricing, yes, provides us the chance to generate higher margins, but not necessarily and not always. And these are some considerations which come under customer profitability analysis. How profitable are different segments and how profitable are serving different customers for the company. Life cycle costing, it's a topic relevant when it comes to a new product development. And the pre-scene has the scope to examine life cycle costing because remember, Trimayr works with manufacturers of hair care products, and life cycle costing is a relevant technique when it comes to coming up, developing new products. And it's therefore something which can be examined in relation to Trimayr as well. Business process re-engineering, once again, a topic sometimes candidate not don't really focus on, because they think in a situation where we have a business such as Trimayr, which is in the service industry focused on providing hair care services, how could a topic such as BPR be relevant? Well, uh, if you look at the past variants, we've seen questions pertaining to BPR being tested from different perspectives. So it doesn't depend on the nature of the industry, because generally candidates tend to think a BPR related task could be highly relevant for, say, a company which is into tech, right? Or in an industry which is very dynamic and which is going through changes rapidly. However, the past case studies do tell us that BPR, if the examiner does want to test, can be linked to the given pre-scene. So please have an idea of BPR, the four processes, the four steps associated with BPR, so that you would be able to tackle any question relating to BPR as well. Value chain analysis, um, a topic which also comes within the purview of operational case study. And sometimes candidates who have done the operational case study tend to overlook value chain analysis on the assumption that it is not relevant for the management case study examination. And let me tell you clearly, it is relevant for the management case study examination. We've had questions relating to value chain analysis. So please make sure that you understand how the different activities, the primary and support activities of Trimayr add up, and how these activities could be impacted under different scenarios. And we've got you covered on value chain analysis within our mocks as well. Moving on, quality management techniques. Remember, we are known for quality in terms of the services that we offer. So another relevant topic for Trimayr, you could start with total quality management. Remember, such a technique is extremely helpful when you have a franchised model, because franchised model relies on consistency and standardization. A total quality management approach is therefore needed across all the franchise salons to make sure that the customers receive the same standard of service across all the salons in line with the brand that we have built. And Kaizen, continuous improvements. So highly relevant when it comes to you know um, the services that we offer, and especially when it comes to the academy. When we are looking at the trainings, we have to look at how we can make sure that our curriculums and our training methods and the overall quality is improved time to time, because the needs of the customers change, the fashion trends, styles do change, and unless we have a culture of continuous improvement, we would lose the competitive advantage, or the positioning that we have achieved among customers, that we are the leader in this market. Quality circles, well, one might argue that it is not relevant for a business such as Trimayr, but we cannot rule out the possibility of quality circles, because remember, the original idea of quality circles relate to manufacturing environments and setups where you have teams of employees working together, and especially in factories, you know uh, where you have different teams, say engineering and assembly, finishing. You have some representatives of these different functions meet on a frequent basis, discuss some of the quality issues that they've encountered, and have this cross-functional collaboration, cross-functional feedback and communication, which could improve the overall quality of the output of the company. So while on a technical perspective, you may rule out the possibility of quality circles not being relevant if it is part of the syllabus, and if the examiner does want to test it, it can be linked to the pre-scene. And we've seen a question from quality circles relating to shiny glass as well in one of the recent sittings, and it was not tested until then from uh, under the new syllabus, which was launched in February 2020. So once again, let's not rule out the possibility of quality circles being examined. And however, it's not going to be a technical task, and it's not going to be a difficult task for a candidate. The only point of need is that you should have an idea about the concept of quality circle, because in the absence of the understanding of the concept, your answer would not be in line with the marking scheme. Costs of quality. Remember, there are two main types of costs: conformance costs and non-conformance costs. And under conformance costs also, we have the appraisal costs. So you need to know the breakdown of the different types of costs that come under a cost of quality report, conformance, the appraisal and the prevention costs, and then the non-conformance costs of internal failure as well as external failure. So please have an idea about the different types of costs, so that if you are tested, you don't have an issue of understanding the task. And once again, as I pointed out, there is nothing complex here when it comes to the cost of quality topic as well. So as long as you have an idea about the topic, you would be able to construct a good response for a task relating to cost of quality. Moving on to the next topic, pricing strategies. Once again, we've had past case studies where there is a new product or a service being developed, and pricing strategies have been linked to such themes in the past variants. So from an accounting perspective or from an accountant's perspective, you should know that there are cost-based pricing methods. And from the perspective of marketing or market-based strategies, you should also be aware of techniques, pricing strategies such as skimming, premium penetration, because remember, these could be tested with regard to the services or in relation to the new products that we are developing under our own brand. So the pre-scene has been structured in such a way that the examiner has kept options open to examining the product side of the business or the service side of the business. And at the same time, the examiner has made sure that not all of our salons are franchise salons. There are also 40 owned salons. So we cannot say Trimayr is a franchise business because we also own salons. And then we also have our own academy. And that's basically a different line of business because we are not necessarily dealing with the customer. Of course, to the academy, we have volunteers coming up, but it's not the same as charging a price from the customer. So it's staff management, and it's also we need to understand that the trainees, the trainee aspect of it, and all of that would become relevant when it comes to the HR related topics within E2. So that's something we will discuss next week. But please remember, the pre-scene has been nicely structured where the examiner has kept all the options open to examining different areas of P2, F2, and E2. Moving on to the next syllabus area, business risks and mitigation. And to start with, I would like to highlight that do not take a very technical or a theoretical approach to business risks, because the case study examination tasks are set on practical scenarios, and the business risks would also relate to those scenarios within the exam variants. So at a basic level, you need to have an idea about the different types of risks. This is to understand what exactly the task requires you to discuss, because there can be tasks which are particular about explaining operational risks or product risks or reputational risks, right? So why should you know the breakdown of the different types of business risks? Well, to make sure that you give the exact answer that is required of you in the examination. So remember, the questions in recent sittings have mostly related to what would be operational risks, the product risks, and when it comes to product risks for Trimayr, it could relate to new products, new hair care products that we sell under our own brand. It could also relate to new services that Trimayr offers. So please make sure that you also, cover the services of Trimayr within the heading of business risks or product risks, to be specific. I hope the types of risks such as reputational risk, legal risk, financial risk are very straightforward. And the technological risk aspect could also come into the picture for Trimayr because we are operating a physical, uh, you know, model where you have to walk in and take appointments. We have no information with regard to an online system where clients can make their appointments, and clients can check the services and so on. So we cannot rule out the possibility that there could be a task relating to technological risks or technological risk combined with some other risks. Contractual inadequacy risk, this was not tested uh, for some time as a separate task. But once it was tested and the candidates, had a tough time understanding what exactly was meant by contractual inadequacy risk, because you cannot be very generic with your explanations if the task specifies the type of business risk. So please make sure that you have a thorough understanding of the different types of business risks, and that you are able to think and come up with mitigation strategies. Please do not walk into the exam with pre-prepared mitigation strategies. The mitigation strategy will depend on the business risk, and the business risk will depend on the information provided to you on the exam day. So be practical. Take a bit of time to understand practically, if you were in that position as a manager, what would you practically do to overcome that risk? So if you take ownership of the situation, and if you get the mindset of a student out of yourself, and if you put yourself as an employee of the company, then you would be able to come up with appropriate mitigation strategies to overcome the identified risks. So that's about the P2 syllabus overview. And of course, I should also highlight stress testing. And something interesting about stress testing was that it was not tested for some time. And once it got tested, and it started to repeat itself. And this usually happens when there is a topic which is tested and the performance of the candidates for that particular topic was poor. And in such scenarios, we've seen that the examiner test the topic again to make sure that the candidates are understanding the importance of the topic as a management accountant. So stress testing, you should know about the concept, and you should also know about the the prioritization, flexibility, and related issues with regard to stress testing. So it will be a difficult task in our mock exam also, and you might have some challenge in coming up with appropriate responses, because we've observed in our mock examinations also the task relating to stress testing has been poorly answered. And this could be down to the fact that it's a topic which is new, and many candidates may not have had the exposure to this topic in at their workplaces or in the industries in which they operate. So don't be disheartened if you're unable to perform well in a topic relating to stress testing in the mock examinations, but please make sure that you gain a thorough understanding of the concept through the master classes, or through the suggested answers, or by requiring more explanation from us through the Q&A sessions that we conduct. So that's about the syllabus overview. And remember, next week we will be looking at the E2 related syllabus areas along with a mock exam task. And we would be looking at a mock exam task relating to business models. So that's about the P2 overview. And also, since this is the August case study sitting, if there are candidates who have taken the exam in May and are resitting the exam in August, please make sure that you don't leave out any topics. There's a tendency that candidates, um, they sat for a variant, and remember, you cannot disclose the contents, the topics, to any others until both sittings are concluded. So you might be aware of the topics, if you were prepared well, and if you could identify the specific syllabus areas, you would know which topics were tested in your variant. Please do not skip those topics in preparation of the August case study examination, because a topic which was tested in May, a syllabus area which was tested in May, can be tested in August. And remember, we've had situations where the same topic is tested in different ways in the same sitting. So let's say the August sitting, you have a task relating to investment appraisal. One variant could look at it from one perspective, another variant could look at it from a different perspective. So please make sure that you don't leave out any topic, because uh, one topic can be tested across different areas and across different sittings of the same free scene. So that's about the P2 related syllabus details, and we can now move on to the discussion of a mock exam task. So let's go back to mock 1. I hope you remember the context of the mock. We were looking at a diversification scenarios. The mock was themed at diversifying our operations into the full service beauty salon market. And in the last week's workshop, we discussed a scenario where the company was looking at acquiring a chain of beauty salons. And as we move on to the fourth section, we have been told that Trimayr has successfully acquired an 80% stake in the subsidiary, with the remaining 20% being owned by the two founding shareholders of G&G. So it's not a wholly owned subsidiary, right? And there is a non-controlling interest of 20%. The existing management team at G&G has been retained, and this is usually a strategy that companies employ when they diversify into a different line of business. And it's no surprise because if you remember, in section 3, we received a counter offer from the shareholders of G&G, and they were very particular about holding on to their director positions. So it could be that they insisted on retaining their management or staff members, and we've agreed to it in the short term. So this is an email coming from the finance director straight away, and this is with regard to a new subsidiary. So let's read through the scenario to understand the background. I'm pleased to inform you that the acquisition of G&G has been successfully concluded. I really appreciate the assistance you and the finance team offered to the board over the past few months. I would appreciate your input on a couple of more matters discussed in the last board meeting in relation to post-acquisition strategy. Please refer to the board meeting minutes I have attached for more details. So, as usual, before we read through the subtasks, let's refer to the attachment to understand the context. So this is an extract from board minutes. The board considered two important matters pertaining to the post-acquisition strategy of G&G. Firstly, the type of responsibility center G&G should be for internal performance management purposes within the Trimayr group. So please understand, we have a new subsidiary, and this is coming under the group structure. So from the head office perspective, you ought to decide how you would classify the new business unit G&G, the new subsidiary, as a responsibility center. So apparently the discussion focused on aligning G&G's strategic goals with the broader objectives of the Trimayr group. So once again, as I pointed out, when you have SBUs, strategic business units, you should make sure that there is goal congruence. And that would mean what is good for the individual unit is also good for the company or good for the group. So often we find a scenario where there is suboptimal behavior, the individual business units, making decisions that benefit them as individuals and not necessarily the group. So to avoid such situations, we need to make sure that we classify the responsibility center appropriately in line with the purpose or the goal assigned to that particular business unit. And as we read further, we see a scenario relating to team management. So let me skip this part because that is not relevant for the discussion of the P2 task today. All right, coming back to task A. Firstly, identify the different types of responsibility centers and evaluate. So there's a conjunction here. And this would mean that you have to make sure you cover both aspects. Firstly, we need to identify the different types of responsibility centers. So remember, there are 4 different types of responsibility centers. So that is something you should have, understood from your P2 recaps. So we need to discuss all 4 because the question is open-ended, where we need to discuss the different types of responsibility centers. And having identified the 4 different types of responsibility centers, the task requires us to evaluate their appropriateness with regard to the classification of G&G within the Trimayr group. So the task is very clear to us. We need to identify or set out the 4 different types of responsibility centers, which are the 4 options we will have. And thereafter, we need to evaluate their appropriateness with regard to the classification of G and G within the Trimayr group. Be prepared. There could be a task which specifies the type of responsibility center and asks you to evaluate the appropriateness. So the task could say that the management has decided to classify the responsibility center as an investment center and to discuss the appropriateness of that classification. So in our mock exam task, we have not narrowed down the scope of the task. We've kept it open so that it gives us the opportunity to explain to you all the 4 options we have and what would be appropriate in the given scenario. Please also be ready for a scenario where you could be asked to discuss about uh, the different types of responsibility centers or to compare 2 or 3 types to a given scenario and thereafter to recommend one of the 2-3 options that you may have been provided with. So the recommendation is also a possibility when it comes to responsibility center classifications. And usually, if there's a task which requires you to recommend, the examiner within the task itself would state that you are required to justify your recommendation. So heads up, if you have to justify one option in comparison to another, please make sure within your discussion you highlight more pros or more reasons for recommending the particular responsibility center. And this is true for other similar questions in the exam as well. So let's say you have been provided with 2 options, let's say option A and B, and you have been asked to discuss the appropriateness of the options or to evaluate the options, which means you will discuss both for and against. And thereafter, you might have to, double down on one of them. And in that case, if you were to recommend one, and if you had discussed more weaknesses than pros with regard to that option, then you will have a tough time justifying that recommendation. And you will have a tough time convincing the marker that you have an argument as to why you recommend or why you chose one over the other. So please make sure that during the planning stage of the answer, you identify the points that will support your recommendation. And if you do so, then your answer will be structured well to make sure that you score the pass mark for that particular task. All right, that's for your future reference. And coming to this particular task, the 4 different types of responsibility centers, at the answer planning stage, you should have typed out the headings of the 4 responsibility centers. And if you look at the answers, the suggested answers for mock 1, that's exactly what we have also done. We have actually, typed out the headings because that's going to be the structure for this task. And we followed the evaluation in a paragraph structure. So that's how your final answers should be presented. However, for the purpose of the discussion, we would be using the answer plans, the comprehensive answer plans that we give for you to understand the approach to the answer, the technique behind the answer, as well as to facilitate revision for closer to the examination. So please don't misunderstand. In the examination, you are not supposed to, and you are not going to develop answer plans which are as detailed as these, but you will, at the very least, set out the 4 different types of responsibility centers, and you might type 1 or 2 keywords which will help you construct a point under each of these headings that you have developed. So that's how your answer planning should happen in the examination. And if you missed the answering technique webinar, which was conducted by Nick 2 weeks back, or 3 weeks back rather, please make sure that you go through the recording of that webinar. All right, first things first. Usually, it's not necessary to provide an introduction. However, if you take this task, we've opted to provide an introduction, and it's a value adding introduction. And when marking some of the answers, we've seen introductions that were not value adding. And this is something that we also highlighted in the last week's workshop, because you can straight away get to the answer. You can straight away start explaining the four different types of responsibility centers along with the appropriateness. And please avoid generic introductions. And generic introductions could, mean that you are trying to restate the information that you have already been provided. And we've seen sometimes candidates type that now G&G is a subsidiary, and now G&G is an 80% owned subsidiary. So all that is known and it's established. Within 45 minutes, focus on points that will guarantee you marks. So while you may see an introduction or an introductory paragraph in this answer, you will see that we have brought in something value adding and something that will guarantee us marks. So what we've said at the outset is that there are four different types of responsibility centers. And why we are specifying four? Because the question was open-ended. It did not specify how many types of responsibility centers are there. So we are stating that there are four different types of responsibility centers, but you will see that we have not stated all those four within the introductory paragraph itself. It's not necessary because we are following it up later on. So in this paragraph, you will not see us mentioning cost center, revenue center, profit center, or investment center, right? Because we don't want to be repetitive and we just want to be time saving. And that's one thing we do when it comes to writing our responses, or writing our answers. We try our best to write them as best as we can in terms of managing time for a candidate and how a candidate would write those responses within a real 45-minute exam environment. So that's what we want you to practice and develop as well. And sometimes if the answer is more comprehensive, we make sure that we add a note, a tutorial note, under that, to say that, look here, if you had discussed 3 points or 4 points, that's sufficient. Or, you need not discuss the answer in this detail. That is very important, because when you look at the suggested answers, sometimes it can be intimidating. And you need to know that when we develop these answers, we don't develop these answers within 45 minutes. And we've been doing this for a number of years, so we know how these answers need to be in terms of examiners published answers in the past and examiners comments. So we make sure that our answers are in line with what the examiners answers are expected. So please don't worry about your answers not being close enough to these, right? However, please also understand that in our answers, we only focus on what would guarantee or gain us marks. And that's how we have structured this introduction also. And we are bringing in the point that there are four different types of responsibility centers. And how do we decide the appropriateness of a type of responsibility center? Well, we need to focus on the principle of controllability. So a manager should be made responsible for something which is within his control. That's how you determine the appropriate type of responsibility center. So if the manager is not in a position to control an aspect, then don't make him responsible for that aspect. As simple as that. So that's how we start the answer. And if you look at the answer plan also, that's the first point we've highlighted. There are four different types of responsibility centers, and controllability is the guiding factor when determining the appropriate type. Let's focus on the first type of responsibility center, a cost center. So we've included a very brief explanation of what is a cost center, because the question is open-ended. So if you look at the answer also, we've made sure that we provide a brief explanation of what is a cost center. It's a technical concept, right? And don't mistake this for answers relating to E2. Say, for instance, you have a question on leadership, you don't have to define what is leadership, right? So it's something that you have to understand by practicing. And that's why we also insist on attempting the 6 mocks across the 6 weeks, so that you can digest the content, over a period of time, and you will get used to the system, that is expected when it comes to, exam preparation. So coming back to the answer plan, a cost center, remember, as the name itself indicates, it's a responsibility center where the manager has responsibility over costs. So the manager is made accountable or made responsible for the control of costs only. And in other words, the manager or the management of the subsidiary would have no responsibility for revenues or investments. So the the responsibility is solely on controlling costs. How do we do that? Well, we will develop budgets. We will come up with standard costs for the products or the services, and we will make sure that the management of the center or the division is able to provide the product or service within the agreed budget or the standard costs. Now, with regard to classifying G&G, our new subsidiary, as a cost center, we can be very open about the fact that it is inappropriate, because this chain of full service beauty salons has been operating as an independent company. It has been generating profits as an independent company, and we are acquiring a profitable company. And we are acquiring the company with the existing management in place. So the management of the company has so far been able to achieve profits and has been able to take the company to one of the top companies in the market. You will see that information in the earlier task. As you can see, the company was recently ranked among the top 10 full service beauty salons in Daslan in a customer survey conducted. So the company is profitable, is growing. And when you have acquired a company, to facilitate growth, there is absolutely no reason why you shouldn't hold them less responsible than what they are currently responsible for. So we are clearly stating that this is inappropriate, because the subsidiary should continue to be responsible for revenue generation. So they will need to operate independently, and they will need to generate revenue. And therefore, we are not going to hold them accountable only for controlling costs. That's not appropriate. And for your understanding and for future reference, a cost center classification is appropriate when a business operates a factory or factories. Each factory would be considered as a cost center. There would be a factory manager, and there would be operations with regard to manufacturing a particular product, and there will be a budget, there will be standard costs, and the manager's responsibility would be to making sure that the product is manufactured within the budget and within the standard costs. So that's when a cost center classification would become relevant. And moving on, the second type of responsibility center would be a revenue center. And as the name itself suggests, in a revenue center classification, the manager or the management of the center or division is held responsible only for the generation of revenue, or only for sales. And there would be no responsibility with regard to costs or with regard to investments in the center. Now, typically, a revenue center classification would be appropriate if you have regional or geographical sales teams or sales, you know, departments. The team or the department or the division would have no responsibility with regard to the production. They would have no control over manufacturing costs. They would be provided with targets, revenue targets, and they would also be provided with some flexibility with regard to pricing, because if you are to achieve targets, the team needs to have some flexibility in offering discounts or quantity discounts. So in a revenue center scenario, we are looking at sales-oriented teams or sales-oriented departments. So classifying G&G as a revenue center is inappropriate because it's a subsidiary which is offering full service, which is operating as a full service beauty salon chain. And therefore, they are responsible for controlling their costs as well as, uh, you know, generating revenue through sales. So if we cannot uh, take away their responsibility for controlling costs because it's a diversified business and the existing management should continue to manage the business profitably, and that would mean we have to make sure that they are held responsible for managing the costs of operating their salons as well. So revenue center classification is also out because it's inappropriate. The third option would be to classify G&G as a profit center. Now, this is appropriate, as you would agree with me, because a profit center, the management or the manager is held responsible for profits. That would mean you are held responsible for revenue as well as costs, because it's revenue minus costs that lead to profits. So in a profit center, the management or the manager is held responsible for profits, and by extension, that means the manager is responsible for generating revenue as well as for controlling the costs. And this would be appropriate because this is what they have been doing since inception. And we are looking at expansion, we are looking at diversification, and we want the new investment to generate returns to our shareholders and to bring more profits to the group. So if we continue to hold the management responsible for profits, it will encourage them to maximize profits, and it will also make sure that there is cost effectiveness, because we would be looking not only at the absolute profit figures but also at the profit margins. So when a subsidiary's profit margins improve, remember the group's profit margins also improve. So the profit center classification would therefore be appropriate. And you can take this one step further and you can classify G&G as an investment center. And what happens if you classify G&G as an investment center? Well, in addition to the accountability, or in addition to the responsibility for generating profits, they are also held responsible for investment decisions. And that would mean we will evaluate the performance of the subsidiary not just on profits, but the profits on the investments that they have made, which is typically known as the return on investment. So in an investment center scenario, we provide complete autonomy to the division. We allow them to make their decisions with regard to non-current assets. So long-term decision-making autonomy is given, and we will hold them accountable on the returns, the profits that they are able to generate on the investments that they make as an independent entity. So there are points in favor of establishing G&G as an investment center. As I already pointed out, it provides the highest level of autonomy. And remember, from a technical perspective, an investment center classification can be done at two levels. At the very basic level, you can provide the autonomy to the subsidiary to make decisions with regard to investments in non-current assets. So that's long-term investments. You can take it further and classify the subsidiary as an investment center, which has autonomy over financing decisions also. So that's absolute autonomy, because this division can then make its own decisions pertaining to issue of equity, debt, and that would mean they will be operating as an absolutely independent entity. There would be no interference from the management. However, you can take away this autonomy, and in terms of responsibility centers, it would still be considered as an investment center, because although they don't have autonomy over financing, they have the autonomy over how they will invest the funds that they have. So it will provide the highest level of autonomy, and it can be in two stages. Firstly, in providing only autonomy over assets. Secondly, providing autonomy over financing as well. Moreover, an investment center classification would facilitate faster decision making, because if you were to make the subsidiary a profit center, then if they have to make investment decisions, they will have to put the proposal to the head office, the group management, and the group management will need to review the proposal and then approve the proposal. So that can take time, and sometimes it can be too late when these proposals are evaluated at two levels, because before you put the proposal to your uh, parent company's board, you as an individual entity will have your own evaluations. So the proposal is evaluated at two stages, and when it receives the approval at both stages, it can sometimes be too late. So an investment center classification, which provides complete autonomy to the subsidiary, will facilitate faster decision making. And also, it can be motivating to the subsidiaries board, because remember, when a company takes over another, the existing management as well as the staff tend to have a negative mindset for being acquired by another company. So you can make sure that the existing management as well as the staff are as motivated as they are now, by making sure that the new subsidiary has the same level of autonomy by classifying it as an investment center. We have one problem though with the investment center classification, that is, if we have to finance the investment center, we have a small problem, because there is an 80-20% ownership over this investment center. So the minority shareholders, the non-controlling interest pertaining to the two founders of the company, G and G, could become a problem if we don't have a clear agreement as to when we will make new investments, when we will fund the business. Because remember, if there is a need for equity, and if there are agreements between us and the minority shareholders, because sometimes they may insist on not issuing new shares in such a way it dilutes the 80-20 ownership. So there is a need for financing, and the subsidiaries board opts for equity finance. And we, as the parent company, we are ready to make an 80% investment further. But if the minority shareholders are not willing to make, it will result in the dilution of ownership. And would they be okay for a dilution in such a scenario? Or would they come up with agreements which stipulate that even though we may invest further, that they will still own 20% of the company? So there can be some conflicts because of the non-controlling interest scenario here. So please make sure that when you are discussing about the appropriateness of an investment center classification in a scenario like this, you highlight the fact that, look here, if funding decisions or financing decisions are made by the independent subsidiary, we will need to support them with equity finance if that is the case. And the question is, will the shareholders make investments if required on an 80-20% ratio? And we need to have a clear agreement with minority shareholders regarding funding. We will have to state that, look here, if there is a need for funding, and if you are unable to meet the funding, you should be prepared to accept, a dilution in your shareholding. So in conclusion, since we have not been required to provide a recommendation with regard to, the type of responsibility center that we ought to, classify, you will need to highlight the fact that uh, you know controllability is the factor which drives the decision. with regard to the classification. And in terms of controllability, we could look at either a profit center or an investment center classification. So ultimately, you will want to decide how much autonomy you like to provide to the subsidiary, and based on the level of autonomy, you can decide whether to classify it as a profit center or an investment center. And once again, when it comes to an investment center, you need to determine the level of autonomy with regard to whether the investment center will have um, the ability or the autonomy to only make asset investment decisions, or can they also make financing decisions on their own, which is somewhat rare because companies don't like to offer such autonomy to subsidiaries when you're operating within the same country, and when the subsidiary is a relatively newer division, and you also retain the existing management, because there can be issues with regard to misuse of the autonomy. So that's about the discussion with regard to responsibility centers. And let's open up the session for a Q&A. And before that, I also would like to remind you about the two study courses that we have. For those of you who have been inquiring about the two different courses that we offer. So you have the essential course, which is mainly for candidates who have sat for the three OTQ examinations, have got through the OTQ examinations, right? So you can benefit through the essential course. However, candidates who are coming through exemption routes, those who have not sat for the three OTQ examinations, the course that we would recommend is the premium course, because as we discussed, if the objective is to pass the exam, for you, the ideal option would be to go for full syllabus coverage, and that could mean the premium course. And also for candidates who were not successful in previous attempts, the feedback and the practice of mock exams in the platform could become extremely helpful. So please consider this option if you are a candidate, who is coming through the exemption route, or who was not successful in your previous sittings. So moving on to the next, you know, uh, next part of our workshop, the Q&A session. Let me pause the recording and provide you with the option to ask any questions you have. Thank you for the questions, and I hope you benefited from the discussion. And please do feel free to contact us, reach us through our social media handles. And if you have any other questions, please feel free to, post them to us as well. So thank you for joining the workshop. Have a great Sunday, and see you all next week. Thank you, and have a good night.